Today we unravel the fascinating world of accounting by exploring how debits and credits function in both manual and computerized bookkeeping systems. Imagine you're a small business owner keeping track of your finances. In a manual bookkeeping system, debits and credits serve as the backbone of all financial records. Here, each financial transaction affects two accounts. Debits are recorded on the left side of the ledger, and credits on the right. When a transaction occurs, like purchasing supplies, you debit the supplies account because its balance increases, while you credit cash since you're paying out money. The key principle is that total debits must equal total credits, ensuring your books are balanced. For instance, if you receive payment from a client, you debit your cash account as cash increases and credit your revenue account, reflecting the income earned. It's akin to using a balancing scale where both sides must be equal. Now, let's switch gears to a computerized bookkeeping system. Here, debits and credits work automatically behind the scenes. A software handles the dual entry framework, saving valuable time and reducing errors. When you input a transaction, the system automatically determines the appropriate debits and credits and updates the ledger in real time. When you're using bookkeeping software, these tools streamline entries, generate reports, and offer insights with the click of a button. Automation also provides an invaluable advantage in managing more complex transactions or bulk data, which is challenging with manual efforts. Integration with bank feeds, digital invoices, and receipt scanning further enhances the efficiency, accuracy, and immediacy of financial data handling. Thus, while the core principles remain unchanged, computerized systems transform bookkeeping into a more accessible, error-free, and responsive activity. By grasping these insights, you make informed decisions and gain better control over your financial landscape.